Good afternoon, everyone. Wanted to welcome you to today's webinar from Vicente Sederberg, New York by the numbers. And the idea here is kind of taking the look at the existing New York adult use market and kind of looking at the numbers behind it. So with that sort of general idea, I'll go ahead and go to the next slide so I can introduce the panelists for the webinar today. So Andrew, let's go to the next slide, please. All right, Michelle, why don't you give a little introduction?
Is that MC privileges? You don't have to go first. Appreciate that. Hi, Michelle Bodian. I'm counselor with Vicente Sederberg out of our New York/Boston office. Just recently had moved, so still pretending I'm with that office, but worked hard for that bar membership, so still want to claim credit for all things New York. And I'm helping clients in the tri-state, seek licenses, keep licenses, and do all the things to stay compliant. So excited to geek out on some numbers today. Thanks for joining us.
Thanks, Michelle. So I'm Brandon Kurtzman. I'm a partner in the New York office and just been helping folks with New York licensing and tri-state licensing. And also very excited to geek out on numbers with Michelle and Andrew.
Hi there. My name's Andrew Livingston. I'm the Director of Economics and Research at Vicente Sederberg, where essentially analyze cannabis markets around the country from the perspective of consumers and businesses and the regulatory growth. And while my background has the Empire State Building, I am in the Denver office.
Thanks, Andrew. I just want to give a quick overview about today's presentation, what everybody can expect. So we're just going to start off with a quick New York adult use implementation update, which Michelle is going to give. And then we're going to dive into the meat of the presentation, which is sort of an analysis of the adult use market based on the existing conditional adult use licenses available. So we'll first talk about cultivation, then we'll go to processing, and then we'll go to the CARD, the retail dispensary license. Obviously, there's, when you talk about New York by the numbers, there's, a million things and topics that can cover. We're trying to just, kind of keep it to certain important questions and issues that we think are interesting for the viewers out there. But then at the end, we're going to save about 20 minutes or so for Q&A. So if anybody has any questions, put them into the chat, and then we'll sort of moderate a Q&A at the end, and you can ask Andrew or Michelle or myself anything that's on your mind, and if we have a good answer for you, we will we'll give it to you. So with that, let's just jump right into it and get going with the implementation update. Michelle?
Sure. I mean, short answer, we're not very far along at all. So a lot left to be done, but at least in terms of what conditional licenses have been awarded, we're making progress. So conditional cultivators, conditional processors have been licensed. That's where a lot of the numbers are going to be pulled from, about what the market's going to look like in the short term. And those two, if those who've tuned in for previous webinars are aware what's going on in New York, in order to qualify for those two licenses, conditional cultivator and conditional processor, you had to have been a cannabinoid hemp processor and cultivator for a certain amount of time. And then for those two licenses, we've got policies dictating no regulations, which is relevant, not only if you're a lawyer, but if you're trying to predict where the market's going to go, because obviously much easier to change a policy than a regulation. And then we do have conditional retailers. That application period closed. No licenses have been issued yet. Rumor has it that OCM is contacting those applicants, giving them RFIs, so requests for more information. Some of the nonprofits who are eligible to apply have been contacted and notified that they've been selected. So things are moving in that front, but until the board, the Cannabis Control Board, votes on those licenses, I wouldn't it wouldn't count any chickens before they hatch. So as it was. So those are our licenses that have been kind of issued to date or in process. Everything else we're waiting for in terms of licenses. So we're waiting on the non-conditional or regular cultivation, retail, processor, distributor, on-site consumption lounge. So everything's still coming there. We are currently in an application window for a testing laboratory. So that application closes December 31st. There also is an open application for sampling labs. This is not getting a lot of play, but these are essentially who's going to drive all over the state and pick up samples. And those two applications are open until December 31st. And then those application windows were closed. There are existing 4 labs who are authorized to test medical marijuana who've kind of been grandfathered in and copy paste into the adult use market. So there are 4 existing labs, but they're hoping to get more labs, and those applications are open. Going real fast then on the medical side. So the registered organizations, there's 10 that exist. There's been rumors circulating for a long time that there's going to be another licensing round for a new round to get more registered organization. Those are those vertically integrated operations up and running. So rumors that applications are coming soon. One precursor to an application is final regs. So we still are waiting on final regs for new medical registered organizations. The medical home grow cultivation regs did get finalized, and those are out the door. And then we don't have a definitive timeline of when the existing 10 medical operators are going to be permitted to convert to adult use. The latest rumor is August. We keep coming back on rumors because that's where a lot of this information is coming from. So what we're waiting on, mostly for 2023, would be the applications opening for all other license types, as well as RO's ability to convert. And then we do anticipate regulations for everything. The OCM has said they'd be coming out by the end of the year. So a couple more months, and then hopefully we see what this landscape's truly going to look like for these non-conditionals. Hopefully churn through that within my 3 minutes.
Nice.
So next slide to get a little bit deeper here. So with that in mind, we're going to take a closer look at adult use cultivation and adult use processing. As I said, where this information is coming from are these conditional licenses. So limited number of licenses, which translates into limited data. But I think that's the last time I'm going to say data, and leave that to Andrew and stay in my lane and just give you the regulatory update. So Office of Cannabis Management, that's who's running day-to-day for all things cannabis in New York. And then they sit under the Cannabis Control Board, who's the oversight board that actually approves the licenses. But again, day-to-day OCM. I refuse to call them the office. That's what they want to be called, but we're going with OCM. So to date, OCM has issued 224 conditional adult use cultivator licenses. And we say to date because there still are some stragglers hanging out there while the application period did close. They've said multiple times at meetings that they do plan to issue more of these licenses. And while you might be thinking, wait a second, some people are harvesting, what's the value of issuing more? You know, there is potential for next year. This is a two-year license opportunity. So even if they weren't able to get plants in the ground this season, they can potentially grow next season. The catch with this, not only in order to qualify in order to be a hemp farmer, so once you get your foot in the door and you're licensed, you can only cultivate a certain amount of square footage of flower and canopy, and it has to be outdoors or in a greenhouse. And when we think greenhouse, you know, we're not talking about the traditional indoor cannabis type greenhouse, and I'll use it in quotes because it looks nothing like a traditional agricultural greenhouse. It's usually a warehouse with a bunch of grow lights that we call a greenhouse. New York is using the term greenhouse to mean what we think of as more traditional agriculture, you know, the pretty glass structure where there isn't a maintained closed environment. And within that, even more restrictive, saying that you can only use 20 grow lights throughout the grow season. So with that in mind, in order to get into some of these predictions and estimations of what might be coming out of the ground right now, we want to talk about first some assumptions, and they're listed right there on the PowerPoint. You know, with any good modeling, as I've learned over the years, you got to make some basic line assumptions and spell that out before we dive into it. So we're assuming, as you see there, 1 harvest per outdoor grow year, 5 harvests per year in a greenhouse, and, you know, specific square footage would be permitted. So I'm going to turn some questions over to Andrew now and let him get into the fun part of this. So Andrew, with only 1 acre of outdoor permitted, or about 25,000 square feet of flowering canopy, again, with only 20 lights, how much cannabis do we actually think can be grown from one of these, one conditional cultivator, understanding there's then 242 licensed. So what's coming out of the ground? What do we think this will translate into?
Yeah, absolutely. Thank you, Michelle. So, this is it's a relatively simple math equation. You take the square feet for an acre, just under 44,000 square feet, multiply that by 30 grams per square foot, and that would assume that that's all flower and canopy. Obviously, they may have less than that. This is kind of the maxed out scenario, assuming that they get that 30 grams per square foot yield for outdoor. Of course, they're only going to harvest once a year. We're not growing in Miami or Colombia or other places where you'll get multiple outdoor seasons. This is New York, so sadly we only get one. So you'd potentially get about 2,800 pounds of cannabis biomass. But the other important thing to recognize is that this likely won't happen for everyone. These are growers that historically probably were just standard agriculture growers and added hemp, and may not have the same degree of high quality cannabis flower cultivation experience as those who would traditionally cultivate inside, and were not previous hemp growers. The other thing that I think is important to note is that in most states, we don't see a full utilization of capacity. So there's been some analysis in Washington and Colorado in the past that showed really anywhere from 40 to 60% of allocated canopy is actually even cultivated. And I was just reading a report yesterday that looked at the first year in Missouri, and it was only about 37% of allocated canopy was cultivated. Further than that, with this greenhouse, and while you may get 5 harvests per year for your cannabis that's under lights, that's a pretty small area given 20 lights. Even if we're looking at a double-ended high pressure sodium bulbs covering anywhere from 36 to 49 square feet per light, we're still looking at what is a relatively small area within that 25,000 square feet. And those other areas that aren't under artificial light will only likely get 1 harvest per year, given the fact that we are growing in New York.
All right, thanks with that. And so, you keep hitting the seasonality of the grow, the outdoor aspect for these conditional cultivators. So with the primary harvest coming from seasonal or greenhouse, what does that mean for supply? We're waiting on, obviously, the conditional retailers to get licensed, so we don't even know who'll be selling it. But assuming one day there'll be someone to sell this product, what does that mean? What's coming out of the ground? What can be sold?
So this is definitely a complicated thing when it comes to managing a cannabis market, right? We all know that for most agricultural products, you have a harvest period, and all those products come out at that same time, and they get processed and stored. This is why American agriculture relies so much on corn, because it stays around for a long period of time. But cannabis flower does not, and so really, this is emblematic if you look at a state like Oregon, which has a relatively large amount of cannabis grown outdoors relative to its total cannabis harvest. And what you can see there on the right is some serious spikes that occur during the fall period when supply just increases significantly. Less so in Colorado, where we do have quite a bit of outdoor cultivation, but it's not to the same extent as far as the proportion of our total market. And so what this will do is create seasonal supply shocks, which will drive the price of cannabis down, and put a strain really both on testing labs, who will have to deal with a erratic cannabis supply and thus a huge amount of demand for their services in a short period of time, and also pretty significant stress on cannabis processors. So there's going to be a period of time when those cannabis processors either have to deal with or don't a large amount of cannabis grown outdoors, and particularly because those outdoor hemp farmed cannabis flower and trim will likely be more inclined to go towards processing, as it doesn't always necessarily have the same bud appeal or the same look as cannabis grown indoors that consumers are accustomed to. That's going to put a strain on those processors to deal with what is a seasonal irregularity. And then again, given the fact that this is a 2-year license, we'll see, do they continue this license in the future, or do they recognize that the seasonality may be hard to manage for the other portions of the supply chain? But if you're a processor and you're looking to create equipment that can set up quickly and deal with a large amount of volume, and then maybe you just license that and the manufacturers, don't keep that equipment around. There's a great opportunity. And all these troubles really do spell business opportunities when it comes to understanding what the supply chain and the seasonal supply may look like for cannabis in New York.
Great, thanks. And you started hitting on demand, obviously going to be a huge component. Everyone's anxious to get this market off the ground. So given that the initial conditional cultivators, small number, smaller harvests, and the supply right now is coming out of the ground, it's seasonal again, no retailers no retailers licensed yet. How much supply does New York actually need to meet potential patient and consumer demand once we're, up and running being a relative term, knowing a lot more is coming for 2023 and onward, but how much of the market could these initial conditional cultivators and processor really support?
Well, early on, a pretty significant number, right? So, we were looking at, maximum of, 2,800 pounds or so, and there's 240 of those. So that's quite a bit of supply given the total market. But again, the vast majority of those operators are not going to max out their supply. They're going to go smaller than that. And many of those 240 or so likely aren't going to even have a harvest in this initial period of time. So as far as biomass on the market, early on, I'm less concerned there than I am concerned necessarily with the number of retail stores, which, which we'll talk about later on in the presentation. But here, if we're looking at flower and pre-rolls and then biomass required for extracted and manufactured products, we're really growing from about 23,000 pounds up to, about 450 or so thousand pounds of biomass and cannabis flower. Now, as I'll mention throughout the presentation, this is all predicated on the New York market kind of growing, I would say in a somewhat optimistic route. New York is, particularly in New York City, has a really entrenched gray market and illicit market. And, New York regulators are going to have to work hard licensing and in order to provide consumers with the availability for storefronts, the availability of products, and the supply that they need to be able to, purchase cannabis at a price competitive with the illicit market. So as we continue to go through this, these are projections. If I gave this presentation a month or 2 months ago, these numbers would be different, and they likely will be different 2 months from now. So all of this is continually updated based upon what we know for licensing timelines and the growth of the New York market, and what we think is, likely, but still, not too dour of a prediction for how the market will develop. So yeah, when we're looking at total biomass, it's about half and a half, a little bit more on the flower side. But again, that will depend upon, how consumers' tastes and preferences shift over time. And we'll talk about that in a moment.
Great, thanks. And before I hand it over to Brandon to do processing by the numbers, should use this opportunity, as you said, everything changes. Quick disclaimer, while we're emailing out a copy of the PowerPoint, obviously what you're relying upon this data and this information is fluid and can change at any point. So caution against, using this to then, go lobby someone to invest in your business based upon these predictions. It is a little fluid, and certainly, obviously the numbers, the analysis is based upon the input. So how to just quickly throw in that disclaimer and then hand it to you, Brandon, to take off what happens after cultivation.
Thanks, Michelle. So diving into adult use processing, right now the office, I will use the proper terminology, Michelle, has issued 25 conditional adult use processor licenses. And this license permits for the extraction and manufacturing of adult use products, topicals, edibles, concentrates, tinctures, capsules, tablets, and cannabis flower products. One thing to keep in mind is that the conditional cultivation license does allow for those licensees to have a limited processing capabilities, which basically means make pre-rolls and then distribute those products directly to licensed retailers until June 2023, at which time a separate distribution license is required. So keeping that in mind, Andrew, when we look at the market for concentrated manufactured products in New York, what do we know from other states as far as the percentage of sales in concentrates, edibles, and in other infused products?
Absolutely. So, the best data that we know from consumers in New York is, looking at states similar and states across the country. And, despite slight differences in state to state, these are generally hold really across different markets, both new and old. So if we look at Massachusetts, it trends over time, but, cannabis flower is usually about 40 to 50%, with another about 5 to 10% being pre-rolls, and shake and trim is relatively small. So kind of in total, we're looking really at 50 to 60% typically in cannabis flower. In some markets, Illinois, for instance, where, they've always kind of had more processed products, can get a little bit lower, looking at the kind of that below 50%, but we're generally looking at about half of the market is in cannabis flower and pre-rolls. Another 30% or so in concentrates. It's kind of divided, with about 2/3 of that being in vape pens and about 1/3 of that being in bulk concentrates for wax or shattered distillate, things like that. And then a smaller percentage in infused edibles. So this will depend state to state, typically around 10 to 15%. And then a much smaller, usually 2% or less, in some cases 3% or less, in topical products. Over time, what we typically see is that flower kind of generally drops a little bit. In Massachusetts, it's been interesting. That's actually been taken over by cannabis pre-rolls. But in many markets, we often see vape pens kind of expanding, and just the base flower portion of the market slightly contracting. What that will mean for the market is that over time, we'll need more processing capacity relative to the total biomass produced, because of course, we want to take that cannabis and turn it into those vaporizers, concentrates, and other sorts of products.
And so you speak about sort of, biomass. So given that concentrates, edibles, topicals represent, maybe 40 to 50% of the market, what does that mean for the biomass required for extraction? And then, what's the daily extraction capacity for processors, generally speaking?
Absolutely. So again, when we're looking at biomass required, we're growing from 2023 to 2027, upwards to about 250,000 pounds of biomass for extraction. Now, then we ask yourselves, well, how much does that actually mean? Those are annual numbers for production. What does that mean in terms of the number of extractors we need? Well, of course, those extractors, it depends upon how large they are, right? Are we dealing with extractors with 5 to 10 pounds of extraction capacity, or are we dealing with in extractors with 50 pounds? So this kind of shows growing from 2023 to, let's go back for a second, to about 2027, growing, to just under 1,000 pounds of daily extraction capacity. So that assumes, you're extracting 5 days a week, all year. So again, we're dealing with, let's say, people with around 10 pounds or so of extraction capacity, and they're running that every single day at 10 pounds. We probably need about 100 or so different extractors in New York to deal with that. But again, as I mentioned, that's going to be complicated if New York continues, licensing predominantly outdoor and greenhouse growers whose cultivation is going to really be seasonal, right? So imagine what happens if 50% of your total volume of supply comes out during a 2 to 3 month period. That's of course going to mean that you'll need quite a number more processors, or they're going to have to be able to scale up quickly on a seasonal basis to deal with that seasonal harvest.
And so, Andrew, I guess, what does this all look like in terms of product creation? How many units of different products do we expect the adult use market in New York to sell?
Absolutely. So again, this will grow over time as the New York market develops. And again, these model projections are fluid. If you've got questions and you're you're looking to put together your pitch deck in the summer of 2023, please let us know, because these numbers will change, and I'm happy to provide updated figures, projections, and really help you design the models you need to show investors that you'll be successful in the New York market. So when we look at really edible products and vaporizer products, those are going to be the most units, right? But as far as total sales, concentrates and vaporizers will be more than edibles. They just typically have a higher price per unit than the edible products. Topicals significantly lower. While there's a number of really interesting and innovative topical products throughout the cannabis market, consumers typically don't consume those at the rate. You'll eat an edible or two every week, or a few edibles every month. But it takes a little while to go through, your 500 milligram topical product. You're not going through that usually once a week. And so the repurchase is a bit lower. But really, we're looking at millions of edible products, kind of growing into 2027, about 14 million edible product units. And that's based upon an estimate of, about 100 milligrams per unit across the New York market. That takes into consideration not just New York resident consumers, but also tourists and those who live along the border who are traveling into New York. For those of you who live in northern New York, many of you probably drove out to Western Massachusetts to buy cannabis because it wasn't legal yet in your state. And I think that those in Pennsylvania will likely do that as well, driving up into Western New York.
Shocking allegations of cross-border.
Hey, no, they're going to consume it when they're in Massachusetts. You go to Massachusetts, you rent a home in the Berkshires, and you smoke some weed.
No, for all regulators watching, that never happens.
So we've talked about cultivation, and we've talked about processing, and obviously the third part of the supply chain here is the retail, the stores where these products and this flower are going to be sold. So we can look at the adult use market based on the number of the conditional retailers that will be available. And, we have the office has created 14 geographic regions to cite 150 expected dispensaries, conditional adult use retail dispensaries. You have 85 in the New York metro area, which includes Long Island and Westchester, 20 to 25 in Western New York, 15 to 20 in the Hudson Valley Capital District region, 5 to 10 in the North Country, and then 5 to 10 in the Southern Tier region. The map to the left or right of your screen is what the office provided to show you sort of a breakdown of the different regions. And so, given sort of these numbers, Andrew, based on your data, is this going to be enough retailers to meet expected resident and tourist demand? And are there some locations that are going to expect to have more demand than others?
Thank you, Brandon. So, first, kind of the map, a little confusing. That map comes from the Regional Economic Development Councils. There's also actually a similar map that comes from the Office of the Comptroller, which is slightly different. There's only about 2 or so different counties that are in different areas. This one uses the RADC regional map. So here, we look at resident consumers in blue, and then tourists in New York resident equivalents. We can see where we're likely going to see, where we're going to see more consumers, more tourists, and then how that, translates to the number of initial conditional retail dispensary licenses. And it is important to note that tourists are not just those that are, coming from international areas. This also includes people from New York traveling around, but those individuals will likely bring their own cannabis. So, if you've got a house up in, the lakes areas, up in the Adirondacks or others, you're probably going to bring your own cannabis. So this, we're really looking for people from outside coming in. So, when we look at this, a place like Brooklyn, when we adjust for the fact that, Brooklyn has a increased number of cannabis consumers per capita than some areas of central New York, they may likely have, at least initially, more consumers per card store than we see in Manhattan. Obviously, there's a lot of people in Manhattan. They tend to smoke cannabis at slightly lower rates than those in Brooklyn. And while tourism is huge, tourist consumers don't purchase in the same frequency as your resident consumers, right? They may be here for 5 days and purchase some cannabis when they're there, but they're not there for 365 days a year. Now, with 150 stores, though, this is not, I mean, it's going to scratch the surface, but we're not really going to initially meet the amount of consumer demand and really consumer access that I think is necessary to launch the New York market. And it's not just, storefronts, right? New York City relies heavily for almost everything on delivery and on, bike messengers, right? If you want to buy cannabis right now, while there are a number of gray market stores, and, I've done some research, there's also some kind of like traveling carts that move around. Most of the cannabis is delivered through bike messenger, through direct Instagram message or text or things like that. And we're going to need to see that in New York City in order to really penetrate the illicit market. Consumer access, I think, is the most important thing to look at when we're analyzing whether or not the New York market is going to grow at the pace that we hope and expect it to be, and the opportunity that we have. So, any regulators that are listening, or those that are going to be speaking to regulators, the most important thing for the development of the New York market, in total, is to roll out stores relatively quickly, whether or not that's the existing card stores, new licensing, or those who are medical with existing licenses in the state are looking to transition.
So I guess the obvious question here for you, Andrew, is how many retail storefronts will be required?
Yeah. So this is a difficult question, but I'll be transparent about the assumptions that were here. So looking at the total growth of the New York market, if we're assuming transactions at about $75 per transaction, that's typically a consumer coming in twice a month, spending about $75 each time. And based upon what we've seen in some other states, it's about $150 to $200 per month per consumer. That's based on some data in Arizona as well as that in Illinois. So, if they're coming in twice, spending about $75 a piece, and if it takes about 5 minutes per customer to transact, we're looking growing from about 380 stores in 2023 to meet that number of transactions in that time to just over 1,000 stores in the state. Now, it's possible we'll need even more than this, given that the New York market could grow faster than expected, at least in total consumers, or we could see a situation where we have considerable lines. So, Brandon, I know when you were up in Massachusetts helping to roll out that program there's some considerable lines early on. And I think, while that is obviously a fascinating show of interest in regulated cannabis, and the consumers are really willing to go to a storefront rather than their illicit market dealer, you may not want to go to those, wait on a 30-minute line to get your cannabis, 2 to 3, 4 months after those initial stores open. So again, it's really important that New York provide those access points necessary for consumers to be able to actualize their interest in cannabis, and for the businesses to be able to take advantage of what will be a multi-billion-dollar market if it's able to develop as we hope.
Got it. Well, Andrew, thank you. Thank you so much for the insight. I think that what we want to do now is sort of a quick lightning round, ask you just some quick questions and get sort of your hot takes on them. And then there's been some activity in the chats in terms of questions from the people viewing here that we'd like to get to. So let's go to the lightning round, get a few questions for you, and then we can open up and moderate some questions from the audience.
Great.
Sure. So I'm going to start it off, and I'm going to use the word optimistic, which I don't like to throw around too much, especially in front of you, Andrew. But, with all this information and analysis about the different conditional licenses, again, because that's all we have right now, and we're waiting for everything else. What are your optimistic projections for how the New York market's going to grow? Hey, you moved to the cool graphic before you even answered the question. That's the question. All right. So here it is. Let me tee it up. What are your optimistic projections for the growth in New York cannabis market?
Sorry, Michelle. I was
All
a little too.
There you go.
a
No,
little
there's
too-
my drum roll. You're excited.
a little
I
too
know.
quick on
I
my
know.
fingers. Sorry about that. So, currently in the medical market, we're likely, just under about $200 million. That we actually have data for, given that the state actually publishes a tax data. So now let's look at 2023. So this model assumes that, the initial card stores open sometime in the spring of 2023. And then initially we're really, depending on the, different types of consumers, only capturing, let's say like, I think it's about 5% of the New York City market, about 20% of the great outside of New York City market for consumers, greater percentage for tourists, and then a similar about 30% or so for border consumers that are coming over. And of course, not all border consumers will come. It's usually those within an hour, and then obviously less for those that are greater than an hour. So, we're looking at 2023, the possibility of about a $1.2 billion market. This is somewhat similar to what we see, a little larger than what we saw in Illinois and, Illinois, Arizona, and Michigan in their first few years. Of course, obviously, New York is larger than those states. We very well could have the second largest market in the country after California. It's hard to beat California given the 40 million or so people that live in the state. But again, this grows from about $1.25 billion to just over about $2 billion, and really possibly if New York consumers are able to access storefronts, and as long as prices don't plummet, which I don't think is likely given the way the rollout is in New York, growing up to about a 3.4, possibly greater $3.5 billion market by the end of 2027. So for those who are interested in these sorts of numbers, please do reach out to us. These are constantly updated based upon what we know in market conditions in the state of New York. And not only, right now we're providing a snapshot at the state level, but our analysis models, we've got a really comprehensive market analysis and pro forma models, can really pinpoint your specific region, the amount of competition in your region, and what your revenue may look like. So my colleague Anna Pham and I, we do this all day for people in New York and New Jersey and really across the country, using GIS software to provide some mapping to understand what your addressable market looks like, and to really allow you to know potentially what percentage of this $3.4 billion legal, medical, and adult use cannabis market in New York you're going to be able to take advantage of.
So I guess, Andrew, as an economist, what excites you the most about the New York market and looking at these numbers?
Yeah, so I think what excites me most, so first of all, I'm New Jersey born and raised, and when we talk about the city, for me, it's New York City. I grew up about 45 minutes from New York, going in pretty frequently. And it is, almost more than any place else in the country, the hustle and bustle, the city that never sleeps. So, well, really kind of interesting to see how that ingenuity, that entrepreneurialism, that drive, and the speed of New York mixes with what is an emerging regulated cannabis market. So the entrepreneurial excitement, I think, is huge. Right now, everyone is looking at New York as really the next great hope. The California market's large, but it's got complications. It's got bogged down by some, regulatory red tape and some hurdles. And, obviously they're improving their market there, given some streamlining for the regulatory authorities as well as taxes. And I think New York has the opportunity to learn from across the country on what sort of regulatory designs are optimal, both for consumers, businesses, and the community at large. But in addition, New York has one of the strongest illicit markets. And I think New York City regulators, and particularly in the city, are going to have to use some ingenuity in order to create policy that meets consumers at their doorstep. So that means figuring out ways how to securely, safely, and confidently deliver cannabis across the city in a similar way that it's done now, but legally. Because if you gotta deliver only by car and you need 2 people in the car at the same time, it's not going to really be possible in New York City. You're going to have to use the subway or bike or by foot. And I think that that's going to require some policy ingenuity. But I think the New York regulators are really interested in making this market work for consumers, for social equity entrepreneurs, and really for one of the most diverse cities in the entire country.
Yeah, thanks, Andrew. I guess one last quick question. So New York is projected to be the biggest market in the country without vertical integration, and obviously except for the ROs. You know, how do you think that will impact the market and the consumer experience in New York?
Yeah, so this is fascinating, and really where we need to look to a state like Washington, which is one of the only other states that have really prohibited vertical integration, and where we have a long amount of period of time where we can assess how the market develops and the data that comes about. So the first and most important thing is cannabis growers are going to need their own branding, right? In Colorado and others, we have a lot of white label flower, that goes to a storefront and they just sell it like almost like it's their own, or the stores are growing their own and it's branded as the storefront or as their vertically integrated business. So growers, you're going to have to be thinking about investing in branding in some of the same way that growers in Northern California have been doing, or those in Washington, because you want your brand and you want consumers to know that your brand is of a great quality or of a great price when they go to those storefronts. So that's going to be really interesting. Further than that, we're going to have a much more dynamic wholesale market. So in most of the states where you have permissive integration, where there's both vertical integration and not, the wholesale market is large, but it's not the total market, right? So, if there's an increase in supply in the wholesale market, there's not always the number of retail stores willing to take that product, because a lot of those retail stores are vertically integrated and are supplying their own, with their own cultivation. So this is going to be a lot more of a dynamic market. When wholesale prices change or supply increases, that's going to affect all retailers across the entire space. No one's going to be insulated in the same way that they are in markets where there is vertical integration. So it's fascinating. And for those who are looking to know more, speak with regulators, retailers, consumers out in Washington State who have the most experience in a market without vertical integration.
Cool, good stuff, Andrew. All right, so we got about 15 minutes left, and as promised, the Q&A. So I know there's been a flurry of activity here, and Michelle, why don't you get us started here with some of the questions?
Sure, and I'm going to apologize right now if we don't have a chance to get to all of yours, but feel free to reach out to any of us with any questions we don't get to answer live, or we've been doing these about every other month. So if you feel like tuning back in, hopefully you can hit it next webinar. I'm going to start with just a quick question about how the illicit, gray, unregulated, whatever we're calling it today, how that market's going to impact some of these numbers and what's going on. So why would someone go through this highly regulated industry when it seems like you can go through the unregulated version right now in New York without a lot of consequences? And, how does that unknown market size impact your analysis here today?
Yeah, so first off, if you want your company to be legit, you want it to be able to survive into the future. You're not looking to just make money in the next 18 to 24 months and then try not to get arrested. You need to be legal, right? You can't attract real money if you're not running a real business. You can't sell your business for real money if you don't have a real license. So always important to go legit. Our whole point of legalization was to not only stop cannabis arrests and the disproportionate enforcement against communities of color, but to create an above ground regulated market that can demonstrate to the rest of the country and the rest of the world that cannabis should be legal. So please, if you're currently running a gray market operation, stop and get a license. Now, how does this impact the total market? So of course, what this is going to mean is that, the strength of the illicit market, particularly in New York City, is going to slow the pace at which the regulated market is going to be able to develop. So it's all about how can you make products, services, and the accessibility to those products at the same price and convenience, or even lower prices and more convenience than what we see on the illicit market. That's hard given regulatory complications and taxes, but over time, scale has shown that in other states, you are able to push out a pretty considerable portion of the illicit market because consumers would rather purchase their products from those that are, paying their employees an actual real wage, paying taxes, and particularly when it comes to concentrates, edible products, and others that are producing their products in a safe environment, and not just spraying things or making cannabis edibles in an unsafe kitchen. And we all know what happened in 2019 with the cannabis vape pulmonary issues. Those were all from illicit vape cartridges, that were putting kind of unknown chemicals in their extracts. And so we want to make sure that we're purchasing products. And I think consumers recognize that they'd rather have cannabis that is tested, but they're not going to pay twice as much and wait in an hour and a half line to get a product that is relatively similar, even if it's of a higher quality and is tested.
Great, thank you. And I'm going to ask this one of you, Brandon, because I'm controlling the questions and I don't have to answer what I don't want to. So how long do you think it'll take OCM to award the first 150 card licenses? So that's the number they said, about 150 to 200 licenses. And then kind of somewhat relatedly, since these licensees are supposed to be going into facilities built out by the Office of Cannabis Management, how much of the $150 million social equity fund, which I believe is actually a $200 million social equity fund, how much has already been raised? And why is the state being so opaque with some of this information? Why is it hard to get to? Why do you have to show up to a webinar to ask some questions to get answers?
Yeah, so I guess first question, timing. What we've seen with the conditional cultivation and conditional processing, it took about 2 months for the office to review and issue those licenses. So I imagine that we'd be looking at a similar time frame with respect to the conditional retail, the 150. I think that some of the nonprofits that qualify for that conditional license will hear back soon, and then the rest of the applicants will likely receive some form of a request for more information. Then they can respond to that, and then they'll get licensed. In terms of the social equity fund, the 150, 200 million, I don't believe that any of it has been raised at this point. So I think that there's still, that's a work in progress, and they're working on getting those funds together. I don't think that, and as far as the last question goes, I don't think that the office has necessarily been opaque with respect to what's going on. They've opened up the application periods, they've closed the application periods, they've indicated how many applications they've received and that they're reviewing them. And so the information is all there. They've also done a ton of public outreach and webinars to explain what's happening. So they're certainly, I'd say, being fairly transparent as far as what's going on. I mean, just the reality of the situation is when you're standing up a brand new regulatory body and issuing new licenses, these things just take time. And as much as they want to snap their fingers and have it done, it's just you have to be deliberate and thoughtful, and it just takes time in order to do that.
All right, so Brandon, preaching patience, and then whenever New York is operational, how do we think, Andrew, you mentioned kind of cross-border tourism, how do we think New York becoming operational and having legitimate dispensaries open for purchase, how's that going to affect, the pricing and competition of surrounding states like Massachusetts and New Jersey, Connecticut, Pennsylvania, if they ever get their adult use act together? How, our states are small, unlike you out there in Colorado. So how does one new market as huge as New York open up affect other states?
Yeah, so, I think in many ways, New Jersey, particularly northern New Jersey, is going to be the most competitive factor. We're going to see really access for those in New York City. Are you going to go to a cannabis dispensary in Manhattan or in Brooklyn, or are you going to take the PATH train over to Hoboken or Newark and buy cannabis there? So I think New Jersey potentially is going to put some competitive pricing pressure on the New York City market, which will be interesting. Similar thing goes up, when you're closer to Albany, looking at Western Massachusetts, a consumer, they can move, right? And particularly, you're not allowed to move cannabis between markets. But if it's legal in your home state, the risk for consumers, the way they perceive it, is relatively small. And so the question is, if you're dealing with a $50 or $60 eighth up in, an area of New York that's close to Massachusetts, is it going to be better to drive east 30 minutes and buy cannabis for $30 to $40 an eighth? I know that wholesale prices have been dropping. I had to look, talk to my Massachusetts colleagues about what the current eighth prices are in the state there. So that will put some competitive pressure as well. Obviously, when we're looking at northern New York, there's Vermont as well. I think that's probably going to be less of an issue given, New York, that area is pretty rural. Now, when we're talking about tourism and cross-border tourism, really it's those along the Pennsylvania area. Obviously the largest populations in Pennsylvania are in Philadelphia and in Pittsburgh. Philadelphia market most likely will be going to New Jersey and not into New York. But I think the Binghamton market, for instance, will get quite a large amount of interest from those in central Pennsylvania going north. I would imagine my friends who went to Penn State, if they were still in college and not, over a decade ago, would have traveled up to Binghamton to potentially purchase cannabis. So, we'll see that, shifting over time. And of course, it's interesting, what happens in the Buffalo market for those in Ohio or Pennsylvania moving forward. Of course, New York is seeing a lot of its neighbors legalize cannabis as well. So, there was a race between New York and New Jersey. New Jersey obviously got there first, but we'll also see with regards to Connecticut. There's a lot of traffic between New York City and Connecticut, particularly the southwestern area of Connecticut. So that will be interesting as well, putting some competitive pressures and some pricing pressures on the New York City market from the other side.
Great, thank you. And there's a whole host of questions kind of on the same vein of, okay, this is what we know today, what's coming, when are we going to see regulations, when there's going to be regular retail licenses available for application, when there's going to be distributor licenses, on-site consumption. So Brandon, can you talk a little bit about what we're hearing in terms of timeline for, the rest of this market and the rest of the opportunities?
Yeah, of course. I mean, it's a bit of an unknown. The office has indicated that, the regulations for the rest of the license types are coming likely before the end of the year. We'll at least know what the regulations look like for all of the other license types. And, then it's just a matter of, the timing of the application periods and how long that's going to take. I really think that in the second and third quarter of next year, you'll really start to see the market open up to all of the other license types, which will provide the office enough time to do the conditional retail licenses, maybe a new RO round, and then open up all the other license types to both the priority classes and then to everybody else. New York still is trying to stay true to their goal of issuing 50% of all licenses to the different priority classes. And so I think that's going to factor into how licensing rolls out for all of the other license types. But I really think that next year is when the market's really going to start to open up, and we're going to start to see a lot more licenses available for all of the other license types.
Great, thanks. And I think we only have time for one more question. Apologies if we didn't get to you, but Andrew, I just want to talk a little bit about, pricing and some of the modeling related to what we anticipate we're going to see. Is there any external factors, internal factors, I guess, what do we think is going to drive product pricing over, let's say the next year or 2 years?
Yeah. So the most, impactful thing on prices is supply and demand. right? Obviously,
Even I knew
demand,
that one. I knew that one.
yeah. For those of you who remember your high school or intro to college, intro economics, it's about price, it's about supply and demand. So demand is going to depend to a certain degree on the amount of storefronts that people are actually going to access. It's a little more complicated. There's actually what we call cross price elasticity between legal and illegal cannabis. So right now people can go and their demand it's not going unsatisfied. It's just going and being satisfied by the illicit market or by legal markets in other states. And so as we see more of those storefronts, more demand is going to be able to come through those legal and regulated channels. Now, as I mentioned early on in the chat, what we're going to see if New York continues to have a heavier balance between outdoor / hemp greenhouse versus indoor cultivation, we're going to see more seasonal fluctuations than we would in most other markets. I'd be very surprised if it looks like Oregon or Vermont in the future, where the vast majority of cannabis harvested does come seasonal. It might look more like Colorado, where they got a mix of both, but still likely a half or more of production is going to be occurring in indoor areas year round. So we might not see that same degree of price fluctuations. But early on, particularly if we're just looking at stuff from the conditional adult use cultivator licenses, it will be seasonal. That will create major price fluctuations. Now, to what degree those wholesale price fluctuations translate to retail price drops is also going to depend, right? If you only have a certain number of stores and you've got a ton of processed concentrates or flower on the wholesale market that comes out seasonal, retailers may say, hey, I want to take advantage of this and we're going to sell, put large discounts up. So you might see, during the fall, not only, a lot of pumpkin spice products on your shelves, but hopefully some cheap cannabis that you can take advantage of for the holiday period in New York. Now, what are we seeing from neighboring states? So, in New Jersey, we're seeing adult use eighths at around $60, which sad to see because that's what I paid for cannabis back when I lived in New Jersey. And I would have hoped that legal regulated market would drop it. It will over time. But at retail, we're looking at 7,000 plus a pound. It's pretty significant given this is an agricultural product. So I think we'll likely see something like that in New York initially. $50 to $60 eighths, which I'm not up on what the current delivery market prices in the gray market are in New York City. But I imagine we're going to see something in parity and in fact possibly slightly higher on the adult use regulated side. And over time, those will drop. So, we're seeing prices drop in Massachusetts, Colorado market prices over time. You can get $100 ounces and eighths at, around $20 or less. And so, over time that occurs, but that's really going to require that the New York market shake out. And I would be surprised if that happens anytime before 2025 or 2026. I think that given the amount of demand that is needed to come online in New York, this is going to create a little bit of a price buffer. So, as prices come down, as more stores come in, we're going to see those, consumers coming to storefronts. That's going to mean more demand, and thus, the prices are not necessarily going to drop at the speed that we would otherwise think they will. So yeah, it was really, wonderful speaking with everyone. I know that we're getting towards the end. So please, if you do have any questions, reach out to us. I am, really thankful to be able to get to work with some of the smartest people in the country, not only my colleagues, but also our clients. And so if you're interested in learning more about the New York market, building out your business, getting numbers for your pitch deck, or getting insights to speak with your investors, Vicente Sederberg and our economics department, as well as kind of our entire New York and tri-state area, attorneys and staff are here to help you. And I'll let Michelle and Brandon close it out.
Yeah, I think you said it all. like I said, tune in for next webinar. We'll keep rolling out content. If there's anything you would like to particular see, because I know we didn't get to everything, feel free to put it in the feedback. We're more than happy to do follow-up webinars. Looks like there was a lot of compliance type questions on the conditional licenses. More than happy to pop up a webinar on that. Or as Andrew said, reach out to us with any questions, and hope to see you sometime soon in person and not just these virtual webinars with our cool backgrounds.
Yeah, thanks everyone. Have a good afternoon.
Thank you.